Hey, I hope you guys are doing good. Just want to take a quick minute and explain the updated loan scenario I sent over to you guys, just because I think the last one we looked at was probably around July or August when we did the initial approval. But again, congratulations on getting your guys' offer accepted. It's pretty exciting. And then we'll just be, as I mentioned on the phone, just packaging everything up for underwriting at this point. And then once the inspection's clear, we'll look at getting the appraisal process going. But as you can see in the scenario I sent, basically looking at the FHA 30-year fixed rate, the interest rate I have locked in at 3.75%, and then in this scenario it would be a 3.5% down payment for the FHA financing. So purchase price, right here the first line you can see $439,950. 3% down of the purchase price would be $15,398. And then that gives you a base loan amount of $424,552. So on the FHA financing, again, they do what's called the upfront mortgage insurance premium, and that's basically kind of like prepaying your car insurance for 5 years. It's factored over a 60-month period. And then they finance that back on top of the loan amount, and that factor is basically 1.75% of the base loan amount is what they add on to the total amount financing. So in the end, the total loan amount would be $431,981. That's what the principal and interest payments will be based off of at 3.75%. The estimated APR, 6.45%, looks a little bit higher than normal, just because it does take into account the $7,430 for the upfront mortgage insurance premium, and then all the other costs involved with the loan, and turns that into a percentage form with the interest rate included, so you can kind of see the true cost of obtaining the loan. So again, this isn't anything that you're paying out of pocket, it's financed on top, but for the APR, it calculates it as if it was basically like a prepaid finance charge. So moving down the sheet here, the principal and interest payment for the loan, again at $431,981 at 3.75%, would be $2,000.57. Then the FHA monthly mortgage insurance amount would be $473.62. So the monthly amount is based off of the base loan amount, and the factor they use there is 1.35% for the annual mortgage insurance, and then they break that down into monthly payments and include it in the monthly payments. So $473.62 there. Property taxes for the home, I pulled those off the county site, and the amount monthly comes out to $398.02. That would be included in the monthly payment as well. The homeowner's insurance, you'll let us know who you want to use for your homeowner's insurance policy, and then once we have the appraisal report back, we'll contact them, request what's called the homeowner's insurance binder, and then at that point we can update the premium amount. Right now I'm using $1,200 for the annual premium, probably overestimating that might even be by quite a bit with your profile and everything. So again, I'd rather overestimate on things than underestimate and raise them later. I'd rather reduce everything. So once we have the appraisal back, we'll contact your insurance company and then get the binder request form. So what you want to do in the meantime is just contact your insurance agent or the company, let them know that you guys are purchasing a home, and that somebody with OnQ Financial will contact them about setting up the insurance binder. You can go over some of the details in that, but lost payee information, everything's going to be escrowed, but we'll have all that information on our binder request form that they'll need to complete the insurance binder. So don't worry too much about like all those details with them. Just let them know that we'll get in touch with them to get everything set up there. So total monthly payment in this scenario, $2,972.21, covers principal and interest, mortgage insurance, property taxes, and the homeowner's insurance. Next box down here is the closing cost section, and basically no loan origination or discount fees are going to be charged on your transaction. Title insurance, I contacted CW Title and got their title insurance amount from them, so $802 for the title insurance. Again, what title insurance is make sure that you get a clear title to the property when you take ownership. They'll also make us aware of like any easements, other little details that you may not know about. Will come up on the title insurance. So escrow fee, $947. So I talked to Coventry down at First American. Her and Crystal will be handling the escrow for your transaction. And basically escrow, we send all the final loan paperwork to them to be signed and notarized by you guys. They also take care of handling all the funds, so we'll wire the loan proceeds to them, and then they'll take care of wiring the funds to and from everybody's account. They'll also work with the county and the title company to record and transfer ownership of the property. So wire fee, $30 wire fee. That's basically on cue, just recovering the wire fee for wiring the loan proceeds to an outside escrow company. Appraisal fee of $535, pretty standard for a FHA appraisal right now in the industry. So $535 will be paid to the appraiser that goes out and appraises the property, and then you guys will also get a copy of that report once we receive it. So credit report fee, $23. So we have the initial credit report that we use to do the pre-approval, and then just before closing we're going to do what's called a soft credit check or a credit refresh. It doesn't give us credit scores, and it doesn't count as an inquiry against your credit, but it will let us know if there's been any new credit inquiries since we pulled the credit report, and then also if any new accounts, anything like that have been opened. So we just want to make sure at the end that we're closing the loan with basically the same credit profile as what we originally approved the loan with. So next two fees down here, tax service and flood certification. We actually don't charge those fees. We do a flood certification, but we just cover that cost, so no charges there. And that basically, what the flood is, just make sure that there's no flood insurance required on the property. Processing fee of $985, that's paid to OnQ Financial, so that's basically how we get paid. Pretty standard right now to see a processing fee on every transaction, and some companies may even break it up between processing, underwriting, or an application fee. So we just include it on one line. When you receive the application disclosure package that I mentioned on the phone earlier, this fee here, along with the wire, will actually roll up into the origination on what's called the good faith estimate form. So there will be a sheet kind of similar to this included in the application disclosure package. It's real easy to read. The good faith estimate that you get, it'll have numbers all over, but it doesn't tell you like your down payment, monthly payment amount. It just covers the closing cost and the prepaid items. So, and we can go over that more later once you receive that. Recording fee, right now I'm just estimating $200. For Snohomish County, it'll probably come out somewhere around $180, $185. But again, just try to overestimate a little bit because it can go up to like $195 to $200. So what that is basically covering the fee for recording all the documents with the county that transfers ownership of the property. So this scenario, you can see here, total closing costs would be $3,521, and that covers all the third-party fees along with OnQ Financial's fees. So on your purchase and sale agreement, next box down here is the prepaid items, and the first line here is interim interest, and what this is basically interest on the money to get you through the remainder of the month and into the normal billing cycle. So with your transaction closing on December 17th, there will be about 15 days of interim interest in there. So that's basically interest on the money from December 17th through January 1st. And then your first payment wouldn't be due till February 1st. So you basically cover the interest, and then that'll get you into the normal billing cycle. And then from there, first payment would be due February 1st. So you always pay interest on the money that you've used. Property taxes, I always estimate 6 months due at closing. So basically, that usually covers everything for the property taxes. But what it is, as you guys know, property taxes are due in April and October, and they're for a billing cycle of January through June, June through December. So you'll have a little bit where you pay the seller of the property back for the property taxes that they covered, and all this will be done at escrow. And then the rest of it will go into your reserve account. And what that does is make sure that so when April comes around, because you're only going to have basically 3 payments before the property taxes are due in April, make sure that there's enough in the escrow account to be able to pay the full 6 months and leave about a 1 to 2 month cushion in the escrow account. So 6 months typically covers all that. Kind of skipping the 200 here, insurance reserve, kind of the same thing as the property taxes, but it's for the homeowner's insurance. And the insurance premium, you're going to pay the first year premium at closing, and then they'll probably collect 1 to 2 months at closing as well to go into the escrow account. So once they do that to make sure that that there's enough in the escrow account to cover the full year premium when it becomes due in 2015. Then basically, so you're going to pay that full year premium, and then you're going to have roughly 11 payments due before that next annual premium becomes due. So 1 to 2 months in your escrow account will cover it, just to make sure that there's enough in there, so when that premium's due again the following year, they can just pay it in full, and then that'll leave the 1 to 2 month cushion in there as well. So total prepaids for this property would be $4,454. Again, that's covering the interim interest, property tax reserves, and then the first year homeowner's insurance and the homeowner's insurance reserve. So moving down into the settlement box here, you can see 3.5% down payment, $15,398. The closing cost of $3,521, and then the prepaid items of $4,454. So that's basically all the fees involved plus the down payment. So the total in this scenario would be $23,374 due at closing. So and again, that'll cover your down payment and all your closing costs and that. So hopefully this just kind of gives you a good refresher on the loan scenario. And then any questions, definitely give me a call.